So by the time I post this, it's a pretty good guess that gold will be doing something other than what it's doing right now. But right now, it's pulling back. So does that mean it's time to buy? So it looks like we have a correction in gold price underway. You know what that means? It means that there is now a chance to buy the dip, as they say. Price is, what, somewhere right around 23.10 as I'm recording this. And if somebody told us 6 months ago that we would be calling 23.10 a significant pullback, we would have been checking for head trauma. Now, the story here is the sell-off. Gold is down nearly 3%, and that's the largest daily loss in 2 years. So it's a pretty big story, but the story is not that gold is done with its run. Before we get back to it, if you're looking for gold or silver, check out SD Bullion. New buyers even get gold and silver for spot. That's sdbullion.com/new. And we can't forget here that gold is still one of the best investments of 2024 so far, which is really crazy to say because gold really isn't an investment. It's more a hedge against investment. So it's a safe asset and it's making a run like it forgot all of that. And we hear analysts say to expect a consolidation before getting to the next leg of a run. Well, I look for that pattern too. I've mentioned it a few times recently. So it's certainly not any kind of required phenomenon, but we see it happen over and over. To me, it's a little bit like a shepherd's tale or sea dogma, the whole red sky at night, sailor's delight. It's more of a sign. For now, though, it's really just a dip. So if you've been waiting for lower prices to get in a purchase, well, this is a pretty good drop. So timing actually makes sense right now, too. News of the Israel-Iran conflict is cooling off. Stock market found its first positive trading session in quite a while. So this idea that a correction was due, that makes sense. The events surrounding what's bringing it down right now also makes sense. And that's almost more than we can expect lately because things don't always make sense. So looking into this a little bit further to see what the analysts are saying, analysts are calling this a healthy correction. What's that? Well, more of what we were just talking about. There was an expectation of a correction. Analysts saw the red sky at night. Hopefully they have better tools than that, but they're not seeing a change to this longer forecast of a continued run. So the price could drop down further than we're seeing it right now and still be in that healthy territory. Healthy being somebody else's word, not mine, but technical analysis shows support levels around 2260, so that's probably that healthy range. Now, what else? Well, central banks seem to be continuing with net purchases. And like I mentioned in my last video, we're beginning to see more ETF activity. We're actually seeing the first net inflows of the year. Now, silver is following suit, and I'm widening the lens because it doesn't always do that. It's down below $27 again as I'm recording, and there's not much to note there except to say that for all the talk of silver breaking out on its own, well, we haven't seen clues of that happening yet. So if you do expect that to happen, to retrace below $27 might actually be a buying opportunity there too, because silver's correction was actually sharper than gold's. Now, I'm shrugging off camera because who knows what silver is going to do. So if we look past the Israel-Iran news, we still have Fed rate policy and dollar performance. So the CME Fed Watch tool right now shows traders don't expect a rate cut until September. And that's not new, but we've had a pushback from July. If we look at the DXY index, well, the Dixie is up, and that shows the dollar is just outpacing other currencies. So both the dollar fluctuation and rate policy expectations affect gold price, and neither of them are doing gold any favors at the moment. Now, this rally has more going on here, though. Asian investors and central bank buying, both of those are still pushing everything up, and nothing seems different there. So if you're an analyst giving a $2,500 forecast for gold price in 2024, you probably haven't changed gears on that. Now, Nikki Shields from PAPSULES showed up on Twitter or X, whatever we're calling it, saying the same thing. She sees the possibility for a $100 pullback, but still gives no change to their $2,500 price forecast for 2024. So do we care what an analyst is saying on Twitter? Well, not on its own, but there are a lot of people calling this a buying opportunity, and that part is probably interesting to most of us. 2260 as a possible retracement level, that's a guess I've seen come up a few times, but really anything we're seeing below the 2350 and up levels feels like a dip. I mean, it doesn't just feel like one, it is a dip. So I've mentioned my 10% and my 15% drop signals. Those are just things in my head. Those numbers would be $2,187 for gold spot price and $2,065. Now, I'm not holding my breath for either of those numbers. I just don't think we're going to see anything like that anytime soon. So maybe 5% is the number to watch for. So let's call it good there. Let us know if you're buying this dip, if you're waiting for a specific number, or just continuing on because the run is so well ahead of us. Let us know. And then while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.